Hi, I am Anna. I come from www.ntvforex.com. Dollar selling pressure ramps up once more after worrying New York Fed survey video analysis. http ntvforex.com news ID 2D79 7818 2020 12:46:33 p.m. Market overview. The dollar has taken a turn for the worse in the past 18 hours. There had been a creep of renewed downside pressure forming as Treasury yields had begun to fall over again. However, this creep turned into something more considerable in the wake of the much worse than expected New York Fed manufacturing data for August. This survey data deteriorating is a concern that the elevated COVID infections are about to hit the economic data. This is the first in a series of regional Fed surveys that could paint renewed worries over the state of economic recovery in the U.S. Previously, markets have been reacting to better than expected U.S. data. But could this all be about to change again? It should be remembered that this is just one data point, but it has shaken the dollar and longer-dated Treasury yields have jagged lower bear flattening the yield curve. Another key market this is impacting is pulling renewed buying pressure through the gold price, which is back above $2,000 again this morning. Wall Street closed mixed last night, with renewed strength in the tech sector not overly filtering down to older economy stocks. The S&P 500 closed 0.3% higher but still unable to make all-time highs, ending the day 3,382. Futures are also cautious this morning, with the E-mini S&P 0.1%. Asian markets have been mixed overnight, with Nikkei 0.2 and Shanghai Composite 0.1%. European markets are taking a cautious stance, with FTSE futures 0.7% and DAX futures 0.5%. In Forex, the USD weakness is still the main story, with JPY outperformance being the key winner. It is interesting to see NZD still underperforming. In commodities, the dollar weakness is helping to drive gold back higher by 0.8% and silver 2%. Oil is again struggling for traction, falling by 0.5%. It is another quiet day on the economic calendar, aside from a bit of housing data stateside. The U.S. building permits are at 1330 BST and are expected to improve to 1.32 m in July from 1.26 m in June. Housing starts are expected to also improve to 1.24 m from 1.19 m in June. NBSP chart of the day. A USD CHF. The prospect of a dollar rally has been threatening in the past couple of weeks, but it seems that there was a decisive shift away from this line of thinking yesterday. The Swiss franc is not normally seen as a lead indicator, but this morning we have seen dollar Swiss now at its lowest since early 2015 when the SNB removed the currency ceiling. This bodes well for potential dollar negative range breaks for other major currency pairs too, such as Euro USD. Yesterday AS decisive move lower on USD CHF was a fourth consecutive negative candlestick and tested key support at 0.9050. This support is breaching this morning and a close below 0.9050 would complete a 3-week consolidation rectangle breakdown to imply 150 pips of downside projection. Momentum indicators are set up for the move, with RSI falling over again around 40 recently to now hit 30. Whilst stochastics also look to cross lower with downside potential. The move is leaving 0.9200-0.9240 as key resistance now. Intraday rallies are now seen as a chance to sell. The hourly chart shows resistance 0.9080-0.9100 is now a sell zone, with any intraday unwind on hourly RSI towards 50 as an opportunity. NBSP Brent crude oil. The outlook for the recovery on Brent crude remains on track, even if it is pretty slow going. The market seems to go through phases, where an attempt to break the shackles for a breakout is curbed and then slips into a phase of consolidation. Inside dia sessions are commonplace as the market throws out an array of contradictory moves. However, stepping back, we continue to view the near-term weakness as a chance to buy, with a series of higher lows continuing to be left. Throughout July the support based around $41.30, but now that the market has moved above $43.90, the old June-July resistance, a new floor of support is developing at $44.25. Yesterday's decisive positive candlestick showed a market looking to use weakness as an opportunity. The next step is to build another positive session to try and get some momentum back into the move. Resistance is in place at $45.80, $46.25, but we expect this to be breached soon as the market gradually makes its way towards the $50s. The next real resistance is not until $53.10, $53.90. NBSP Dow Jones Industrial Average. The mixed outlook of the past week on the Dow continues. Since breaking out above 27,580 resistance, the bulls have reacted with a stuttering period of contradictory candlesticks. This is a market lacking conviction right now. The average true range is currently 317 ticks, which is the lowest since February. However, the past 4 sessions have all barely mustered 200 ticks of daily range. What should we read into this for now? This is just a consolidation and nothing to be overly concerned by. Remember, it is the August holiday season. Holding up above 27,580, 27,625 breakout support will maintain a strength to the outlook. Momentum indicators are positively configured still, even if the RSI is just slipping back slightly into the mid-60s, which is understandable. We are still happy to buy into near-term weakness. Even if the market were to drop back into 27,070, 27,580, this would still be seen as an opportunity to buy into support. Resistance is at 28,155 initially from last week's high, whilst the old February bear gap at 28,400, 28,890 is still to be filled. NBSP. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.